Welcome back to the channel, everyone. Today I want to talk about the Department of Justice investigation into predatory short sellers and how that impacts AMC and GameStop. I also want to talk about the November inflation data that's just been released. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, hedge funds are ensnared in an expansive Department of Justice probe into short selling. The US Justice Department has launched an expansive criminal investigation into short selling by hedge funds and research firms, scrutinising their symbiotic relationships and hunting for signs that they improperly coordinated trades or broke other laws to profit. The probe, run by the department's fraud section with federal prosecutors in Los Angeles, is digging into how hedge funds tap into research and set up their bets, especially in the run-up to publication of reports that move stocks, just like how Iceberg Research came up with their phony AMC report, and I bet tons and tons of hedge funds were shorting just before that report. Authorities are prying into financial relationships between hedge funds and researchers, and hunting for signs that money managers sought to engineer startling stock drops or engage in other abuses, such as insider trading. Now, you may remember from this interview with Jim Cramer, he spoke all about how he coordinated phony research and phony reports in order to purposefully drop stocks for his benefit. I've also spoken a number of times on my channel about the short seller's playbook, or basically a short and distort scheme, where hedge funds and institutions spread rumours about a company in order to crush its stock price. Whether that's rumours on a company going bankrupt or running into regulation problems or a new share issue or stock split, tons and tons of different methods that they use in order to crush a stock's price. Maybe they'll spread rumours about the CEO or the CFO and how they're leaving the business and how this is terrible for the company, all to encourage other investors to sell their shares. Moomoo are currently giving away an iPhone 13 Pro every single day this month until Christmas. On top of that, they're also giving away many other goodies, and obviously on top of that, when you sign up to Moomoo, you get 5 free shares valued up to $3,500 each. You can get your first free share valued up to $3,500 by opening your Moomoo account. You can get your second free share by depositing any amount of cash, even if it's only $1. And you can get the final 3 remaining free shares by depositing $2,000. To be eligible for the iPhone 13 Pro giveaway that happens every single day, all you have to do is sign up with Moomoo, open an account, and deposit at least $100. And be sure to check back every single day this month to see if you've won. Moomoo is also a brilliant investing platform. They've got free real-time level 2 market data, they've got advanced charting tools, they've got 24/7 real-time financial news so that you don't miss an important headline, and a global investment community so that you can get some new stock ideas. The US probe opens yet another front in an already treacherous era for those who try to profit on stock drops. Some bearish funds throw in the towel as government stimulus buoyed prices during the pandemic. That pressure intensified as retail investors organised counterattacks on popular short targets, bidding up shares to inflict losses on hedge funds earlier this year. Meanwhile, companies criticised by short sellers have become increasingly bold in firing back, sometimes launching legal battles even as they face government probes that ultimately support short sellers' theses. So interestingly, I'm going to talk a little bit later on the GameStop SEC investigation, which also the SEC are currently investigating AMC. But the SEC may have just reached the end of their line and have now referred that investigation onto the Department of Justice because maybe they found some abuse in the short selling on GameStop and AMC. Still, successfully bringing charges against short sellers could be challenging, given that betting against companies and publishing research believed to be accurate is lawful and even beneficial for markets. Government attorneys are trying to determine whether short sellers engaged in some form of deception, say for example a short and distort scheme. The Justice Department unit handling the inquiry already has a formidable reputation on Wall Street. It recently brought several cases against global banks, so not just small firms but the big dogs as well, and traders for illegal spoofing of precious metals and treasury futures. As part of that probe, JP Morgan Chase paid more than $900 million in penalties after its traders placed and cancelled orders for commodities to benefit positions held by the bank or prize hedge fund clients. Now, the only downside to this investigation is that it came many years after the event had actually happened, and also nobody ended up going to jail. JP Morgan just paid a small fine of $900 million. However, hopefully with this investigation into predatory short selling, people will actually go to jail. Dave Lauer just tweeted saying, "Wow, big news just came across Bloomberg. Predatory short selling is a Scrooge on markets and must be addressed. Let's see the feds finally step in and enforce the rules and laws." He said these short sellers often identify vulnerable firms and target them with a mix of press leaks, regulatory tips, which aren't tips, and market manipulation. He said, "I've seen and studied this directly. These activities are anti-ethical to free markets and destructive to otherwise good businesses." He said it's about time that the Department of Justice stepped in here. The SEC has proven ineffective at enforcing its rules, and fines do not do the trick. We need to see real repercussions to this behaviour, bar people from the industry and send them to jail. Fines are just the cost of doing business. So Darren Harper tweeted saying this is timing. The announcement of the Department of Justice probe comes right after GameStop affirms the investigation of their shares by the SEC. He says this could be related. Maybe the SEC is cooperating with the Department of Justice. So let's talk about that. Now, as I said earlier, I also want to talk about the SEC giving their ongoing investigation into GameStop and AMC over to the Department of Justice, therefore potentially proving that the float was over 100% owned even back in June. With the specific wording used by the SEC in their recent FOIA response, they may as well have just confirmed that the raw vote count in June was greater than the number of shares outstanding, and that the Department of Justice is actively investigating naked shorting on GameStop and AMC and pursuing criminal prosecution. This poster basically predicted the SEC's response a few weeks ago. He assumed they'd say something confirming the existence of naked shorts and their ongoing investigation. And he says that he basically got it right almost word for word. He says, as you can see, their response matches almost exactly what I said we would need to see in order to confirm the conclusions drawn in my last due diligence. He did a search for the phrase locate or identify in all of the SEC's FOIA documentation, and it appears only once in the same section where it describes the only circumstance in which it consults with the Department of Justice before releasing information. And obviously, as an update, as multiple users have pointed out, Bloomberg just put out a release shortly after I posted this due diligence about a Department of Justice probe into predatory shorting. Basically, this guy's assuming that the SEC investigation into GameStop and AMC has been passed over to the Department of Justice, and they will investigate AMC and GameStop as part of their investigation into predatory short selling. Maybe the SEC found something in their investigation into GameStop and AMC about how billions of synthetic shares exist, and the float count was way higher than it should be, and therefore they've had to pass it over to the Department of Justice. Now, so I wanted to quickly cover Adam Aron and the CFO of AMC selling their shares and what this really means. Adam Aron held 400,000 shares of unrestricted stock, and he also held 3.3 million shares of unvested restricted stock. Around the Q3 earnings, he filed to set up 1.25 million shares to be sold and managed by a third party. These shares are going to be sold in set intervals, and this is something he's been planning and has had organised for a number of years now. Obviously, Adam Aron's not getting any younger, and he does need to sell off his shares at some point for family wealth to give to his children so they actually have some money for the rest of their lives. Now, this is obviously something he's been planning for many years now, and he actually put this plan in place some time ago with JP Morgan in charge of selling off those shares. He sold off half of that amount, 625 shares, after the filing in Q3, and that leaves him obviously with another 625,000 shares still in his structured plan that can be sold in the future. Today he sold another half of that amount, so another 325,000 shares, leaving him with another 325,000 shares that he can still sell as part of that already announced structure of share selling. And therefore, Adam Aaron isn't deciding to dump AMC stock because it's falling. This is something that's been in place for a number of years and something he's been planning for a very long time. So the CFO of AMC, Sean Goodman, is 55 years old and therefore also likely has kids that he wants to provide some money to. On top of this, Sean Goodman still holds around 33,000 shares of AMC, valued at nearly $1 million. Over the last 5 years, he's sold $9.45 million worth of AMC. Therefore, Sean Goodman basically sells AMC shares every single year, at least once or twice a year. And therefore, this isn't something randomly out of the blue where he's dumping all of his shares into the market. This is something he does every single year just to get some more money to provide to his kids. Again, this isn't something he's doing dumping his shares because AMC is falling. This is something he times every single year, does it about the same time, again just to have some more money for Christmas probably. Now finally, I also wanted to talk about the November inflation data that's just been announced today. Annualized inflation for November was 6.8%. That's obviously higher than October's 6.2%, higher than September's 5.4%, and is without a doubt the highest inflation rate we've seen since the 1980s. This puts the average annualized inflation for 2021 at 4.5%, way higher than the inflation that we saw back in 2008 at only 3.8%. We're currently running at an average inflation rate higher than any single year in the early 2000s and higher than any inflation we've seen since the 80s and the 90s. This is obviously very, very concerning that inflation hasn't capped at 6.2% and started to come down. No, instead it's actually still going up. This just goes to show that the market is in a horrendous position at the moment, very, very heavily over leveraged, and inflation is uncontrollable at the moment. Guys, be sure to let me know down in the comments below what you think about the new Department of Justice investigation into AMC and GameStop and other predatory short selling. And if you want to stay up to date with all of my new stock and crypto picks, or if you just want some help with AMC and GameStop, be sure to check out the Patreon and the private Discord, linked in the description below, and become part of the team. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.